Do you get nervous when people start to talk about Tina? There is no alternative.
Do I get nervous? No, John, because I think there is no alternative right now with bond yields having been repressed and with the Fed continuing to pump this market. Look, if you have strong earnings from a bottom-up perspective and strong liquidity from a top-down perspective, you will have record after record, and you will sideline all sorts of other considerations. And this week is yet another example of that.
Well, let's talk about this week then. Why is this week another example of that, Mohamed?
So we've had 3 record highs. You've noted now we've got 47 record highs on the S&P so far this year, despite headwinds to 3 things that have been very favorable to this market. One is strong economic growth. We're seeing COVID issues arise in country after country, including Japan now talking about the possibility of a lockdown. 2 is this notion that inflation will be transitory. Well, the PPI number was really hot, suggests there's more inflation in the pipeline. And even the CPI number, while it met expectation, is high. And then the third factor has been that the Fed will continue to be ultra loose, but you've had a migration of more regional presidents towards an earlier taper. But even though you've had headwinds to these 3 things, strong economy, inflation is transitory, Fed will always be supportive, we've gone from record to record. And just shows you the behavioral conditioning of this market is so strong right now.
A few pieces there. Let's unpack a few of them. Let's start with the word transitory, the T word. Earlier on this morning, Mohamed, I caught up with Dean Kernot of Macro Risk Advisors, who compared it's all transitory to subprime is contained. Does that resonate with you? That's a very powerful thing to say.
Yeah, you know, that's a really strong statement. That's the equivalent to what Bill Dudley, someone who I respect tremendously, has been saying about what the Fed is going to have to do. As you know, I don't think inflation is transitory, unless you expand the definition of transitory to 2 years. But if you do that, it's a meaningless definition because things break over that period of 2 years. I don't think inflation is transitory, but the market believes that inflation is transitory, and the market believes it because the Fed keeps on saying it. So if it turns out that inflation is not transitory, there is a risk, a significant risk to the market, and in particular, a significant liquidity risk to the market.